Welcome to Kharoo channel. We are solving the depreciation sums as per straight line method, and in this video we are going to solve practical problem 5, that is on page number 245. Let's go through question number 5. Samir and Company, Mumbai purchased a machine worth rupees 2 lakh on 1st April 2016. So on 1st April 16, machinery 1 is purchased at 2 lakhs. On 1st July 2017, the company purchased an additional machine for rupees 40,000. Additional machine means one more machine. So on 1st July 17, machine 2 was purchased for 40,000. Then on 31st March 19, the company sold the machine purchased on 1st July, that means this machine, for rupees 35. So on 31st March 2019, machine 2, this machine was sold at 35. Company writes off depreciation at the rate of 10% on the original cost. So that is 10% on original cost method, that is straight line method, right? And the books of accounts are closed every year on 31st March. Show the machinery account and depreciation account for the first 3 years ending 31st March 16-17, 17-18 and 18-19. Let's see the financial years. First 4-16, so this is financial year 16-17. On March 17 this ends. The next 17-18, and this transaction is in 18-19. So with this summary, let's do the working. So with this summary, let's start our working note 1, calculation of depreciation. The method is SLM and the rate is 10%. Then we will need particulars, machinery 1, machinery 2, machinery 3 and total. We will also need purchase date and purchase amount. So in first financial year 16-17, on 1st April 16, we had purchased this machinery for 2 lakhs. Then on 1st July 2017, for 40,000. Oh, this is not third machine, but we have sold the second machinery. So let's change the working. So working is changed and first 2 years data is not required. So we'll clear that out. So for first year, the depreciation will be less depreciation FY 16-17. The machine was used for whole year. So at 10%, 20,000. In first year, second machine was not there. Then in next year, WDV will be 1,80,000. In second year, the second machine was purchased. For first machinery, depreciation will be for whole year. The asset was used for whole year. But for second machinery, we will need some working. 40,000 into 10% into the machine was used. The machine was in the business from 1st July 2017. So the depreciation will be for July, August, September, October, November, December, Jan, Feb, March. That is for 9 months. First machinery 20,000, as the method is SLM, 10% of cost of asset, that is 2 lakhs. And for second machinery, 40,000 into 10 divided by 100 is 4,000, that is 10%, into 9 divided by 12 will give us 3,000. So for second machine, the depreciation will be 3,000. Okay, so 40 minus 3 will be 37 and 180 minus 120 will be 160. So WDV as on 31/3/18 will be this, less depreciation for 18-19. Now the second machinery was sold, but the asset was used for whole year. So for both the assets were used for whole year. So the depreciation will be for whole year, 20,000 in first machinery and 4,000 in second, on 2 lakhs and 40,000. So the WDV at the end of third year will be, that is on 31st March 19, the WDV will be 1,40,000 of first machinery and 33,000 for second machinery. Now let's do the totals. First year the total depreciation will be 20,000. In second year will be 20 plus 3, that is 23,000. And in third year 20 plus 4, 24,000. WDV after first year will be 1,80,000. After second year will be 160 plus 37 is 197. And in third year this asset will be sold. So this asset will not come in our WDV total, right? This asset will not be there in our business anymore. So the WDV will be only of first machinery, that is 1,40,000. Correct? So after working note 1, we will have to find working note 2 for this machine. For machine 2, as the asset was sold, we need to find its profit or loss from sale of asset, right? So working note 2, profit or loss from sale of asset, sale of machinery. We are selling machinery 2. What is the sale amount? Sale amount is 35,000 rupees, 35,000. And what is the WDV? WDV as on date of sale. It was sold on the last day of the year. So WDV as on 31st March 19. And the WDV is 33,000. So we have received 2,000 more from selling the asset from the book value. So we have got a profit of 2,000. So with this, all the working notes are done, and now we can open our machinery account and depreciation account ledgers and start posting. So let's open machinery account and depreciation account. First machine was purchased on 1st April 16. So the entry will be 2016 April 1 machinery account debit to bank account 2 lakhs. So this is done. Then during the year there are no other entries. So this depreciation entry we will pass at the year end 2017 March 31 by depreciation. Depreciation account debit, here we will pass 2017, here we will debit March 31. Depreciation account debit to machinery account, the amount is 20,000. Here depreciation account debit to machinery account 20,000. So the first year is done, we can close the books. 2 lakh, 2 lakh, and the closing balance is 1,80,000. Buy balance closed down. The next day we will carry this amount forward. 2017 April 1, to balance brought down 1,80,000. Correct? And at the year end, depreciation account will be closed. The balance will be transferred to profit and loss account by P&L account 20,000. The account will be closed with nil balance. And this 1,80,000, you can see the amount matches. So now in next financial year 17-18, we have purchased one machinery. We have to do the posting for 40,000 on 1st July 2017 to bank account. 40,000, and after that we'll pass a depreciation entry for the year 20,000 plus 3,000. This is the 23,000 total amount. So at the year end 2018 March 31, by depreciation 23,000, and depreciation account will be debited 2018 March 31 to machinery account. Amount is 23,000. Correct? With this, all the entries for second year is done. So we can close the books. 1,80,000 plus 40 is 220. 2,20,000, and 220 minus 23,000 will be 197. Buy balance closed down, and we'll carry that forward. April 1, to balance brought down. The amount is 1,97,000. And for closing depreciation account, On the last date 2018 March 31, we will transfer the balance of depreciation account to P&L account. So by P&L account 23,000. So we will be closing this account with nil balance. And for the last year, we are selling the second asset. As we are selling it on the last date, we can pass the depreciation entries. Generally, we pass the depreciation on the machine that we are selling on the date of sale separately. But since the date of sale is at the year end only, we can pass this 20,000 and 4,000 entry together on 31st March. When date is different, the sale date is different, that time we pass separate entries. So here we will pass just one entry, 2019 March 31 by depreciation account, and the amount is 24,000. And in depreciation account 2019 March 31 to machinery account, the amount is 24,000. And now we'll pass the sale entry, sale of machinery. The sale amount is 35,000. We are receiving this amount, so we will debit the bank, debit the receiver rule. Then the asset is going out of business of 33,000. With the rule of what goes out, we will credit the machinery account, and since this is profit and we credit the profits and gains, so we will credit this profit on sale of machinery account, right? To give the effect to this 33,000 here, we will have to split this amount into one debit and one credit. 35 minus 2 will give us 33,000. If you want to credit 33,000, if we want to credit machinery account with 33,000, what we will do? First we'll pass bank entry by bank account. This is 35,000, but we have to reduce the credit effect by 2,000, right? That is the profit on sale effect. So on 2019 March 31 to profit on sale of machinery 2,000. So with this effect, 35 minus 2, 33,000 value of asset is going out of business. Correct? So all our entries are done, and now we can close the books. So while closing the books, the total will be 197 plus 2 is 199, and 199 minus 59, right? 59. This will give us 140 by balance close down. And the next day we will carry that amount forward. April 1 to balance brought down 1,40,000, and this 1,40,000 amount matches with our working, right? That means our calculations are correct. Posting is also correct. Then we'll close the depreciation account. At the year end, we will transfer all the balance to the profit and loss account by P&L account. The amount is 24,000. With this, the account will be closed with nil balance. Okay. So all our posting is done. So what did we do in the sum? We summarized the sum and did the working of depreciation calculation, and we sold one machinery. For that, we did the working 2 for profit or loss from sale of machinery 2. After this, we opened machinery account and depreciation account and did the ledger posting of 3 years. So this is your practical problem 5 from your textbook. That's it for this video. If you find this video useful, please like the video, share it with your friends, and subscribe for the future notification.